This is my second time in Slovenia, and the last time I was here was 11 years ago, and since then, I've been telling everyone Slovenia is such an amazing country. Everyone must come visit. I was really charmed by the place 11 years ago, so when Urban asked me to come, I said, of course, I would love to. So I'm going to be talking a little bit about fintech, and you'll understand why fintech is important to me. So topics, I'm going to talk about who I am, what is fintech, some trends in fintech, and what to expect in the coming years. So let me tell you about myself. So I personally have been an entrepreneur on the fintech side a couple of times, 2 exits. One was a payments company called Fee Fighters. It was acquired by Groupon in 2012. And then an auction company called Innovative Auctions, Applicant Auction, sold in 2015. And then sort of since that first exit in 2012, I've been investing in companies, primarily fintech companies, although early on I was not so focused. So since 2012 I've been investing, and then since 2015 I've been investing with 500 Startups. 500 Startups is the world's most active seed investor. We invest globally. We've invested in over 2,000 portfolio companies, and we have about $600 million in AUM. And we're active in over 50 countries, or we've invested in over 50 countries. So we're really active. We do a lot of stuff. We actually have a couple of investments in Slovenia as well. And in fintech, we're the most active overall, so we happen to be the most active in fintech as well. By being the most active, you tend to see the most things, and also because we're at the earliest stages, we tend to see trends before others, just because people come to us first. So first, what is fintech? I think about fintech as it being a term that can describe any technology solutions that make financial services more efficient. And those can be as a disruptor, meaning directly going after consumers or small businesses, or it can be as an enabler. A lot of companies are just helping financial institutions execute better, and we invest across all of them. So here are some of our investments. We've invested in lending, blockchain, crowdfunding, wealth management, financial management, insurance, and payments. And you can see some of our most successful companies that you might be familiar with are Stripe and Credit Karma, but there are a lot of others, and we've been investing a lot in the last few years. So I think hopefully over the coming years, you'll see a lot of names that you recognize here in your life. So what's going on with fintech? Fintech has been on an absolute tear. So if you look over the past several years, fintech investment went up to $40 billion last year. With 5 years ago, it was only $8 billion, so massive increase. And in that increase, it's really been, there's an interesting story here, because from 2014 to 2018, the US only doubled. So the US went from about 6 billion to 12 billion. So where did all that growth come from? Well, it really came from Asia. Asia has been growing at 265% year over year. And the whole world is growing. Unfortunately, Europe is not growing as fast as the rest of the world. But in the US, this has been a really big change. And one of the things that's been changing is we used to always think that innovation started in the US and went elsewhere in the world. Now, myself and many other venture investors are actually going to China and looking at just spending time in China, seeing everyday people, because the kind of innovation that's coming out of China is very different than the kind that's coming out of the US or the rest of the world. So we've really got our eye to China, and that's where a lot of this growth is happening. And it's happening in everything. So this is a website of Wells Fargo Bank, one of the largest banks in the US, and this sort of shows all the places that fintechs are going after the bank. And you see that it's like, there's not just one fintech that's replacing the bank, it's a bunch of different companies going after various verticals of the bank. And you see, we've had a lot of success. Again, to the previous slide, we were talking about China. We've got about 65% of the unicorns based in the US, but that's also because it takes time to grow a unicorn. And as funding has was big in the US years ago, it was not big elsewhere. I think over time you'll see the shift, and there'll be a lot more exciting companies coming out of Asia. Fortunately, we've invested in 2 of these unicorns. I wish we'd invested in more, but we've got 2, Stripe and Credit Karma, that are part of our group. So how did we get here? This shows just a Google Trends search I did yesterday on fintech, the term fintech. And if you look, in 2014, where my other chart started, in 2014, not that many people were talking about fintech. If today we're at 100 in 2019, in July of 2014, we were at 6. So things have really changed very rapidly, where fintech is now a term that everyone knows, not just those in the tech world. So what changed? How did we get here? I think it starts if you look backwards. So starting in 2008, we had obviously a global financial crisis, and the banks lost a lot of trust. People like me saw this as an opportunity to create something better. The tarnished brand of banks plus new regulation was a golden opportunity, and a lot of the folks that grew up in this time, just became adults in 2008, saw the banks as something they didn't like. There was a big backlash against the banks. And so as these guys grew up being digitally native, over time there became an opportunity for fintechs. And while the banks were hated, they're still massive. So globally, financial services represents 17% of global GDP. That's $13 trillion. So of course we all want a piece of this pie. And you would think with this massive opportunity, technology would come in and solve this, like it has in many other industries. But actually, even in the developed economy like the US, less than 1% of loans are currently generated online. So there's a massive, massive opportunity still to come to bring fintech, financial services online, and that's really exciting. And we see that it's not only exciting to disrupt traditional financial institutions, you can actually create massive businesses just serving them. And so the banks actually spend about 30% of their expenses on operations and compliance, massive amount. So they spend $480 billion a year, it's just US banks, on operations and compliance. So we've actually made a few investments in that space that helps them do a better job of compliance. And then the thing that excites me the most is spreading this globally. So my fintech career actually started in the nonprofit sector. I did microfinance in India. So many times, I'd be working on a farm, and a customer, we had borrowers around the area. So to service one borrower, I would take a bus and then ride on the back of somebody's motorcycle to serve one borrower, to lend them $200. And then every month, we'd have to go back and get the money back. Now that's all available in your hand, in a smartphone. And there are lots of companies going after this exact segment that I tried to serve 12 years ago manually, but doing it via the smartphone in a much more efficient way. And that efficiency also translates to lower costs for the customers. So this really excites me, is that in the next 3 years, there'll be 2 billion more smartphone users. And that's largely coming in Asia and Africa. And that's very exciting, the opportunity to bring all these people into the formal financial system. And so this fintech has the opportunity to transform a lot of people's lives. And we've seen that technology has already done that. So if you look at the largest companies, even in my recent lifetime, like when I was in college, the largest public companies were in the oil sector, in the banking sector, in General Electric, the conglomerate, all the other things that they did. Now, if you look at it, the largest companies in the world by market cap are all technology companies. And that's a huge opportunity, because these companies are actually all becoming fintech companies too. If you look at Google, they're a payments company. If you look at Apple, they've got payments and insurance. Facebook has launched payments. and Amazon has launched payments and lending. Now, these guys actually, their core business is not financial services, but they don't want to allow financial services to slow their growth. Amazon is in lending and payments, but only because it increases your basket size, or actually increases their merchants on Amazon. Now, Uber is a big opportunity. Uber got into the leasing business. They're leasing cars just to see if they could attract and retain drivers. They're also, in the US, the largest driver of new bank accounts. And why is that? It's because when drivers sign up to drive for Uber, they need to have a bank account so they can get the money. And many of these drivers actually don't have a bank account, so Uber is signing up bank accounts for them. I think that's a huge opportunity. We're seeing new entrants in fintech around the world. So we're seeing retailers. How many of you guys know about Ant Financial? Very few. Okay, it's a Chinese company. They're a consumer and small business payments lending company. They started, just in the past several years, grew to $150 billion valuation. Massive company. And they spun out of Alibaba. And so they use data from Alibaba on their 9 billion small business customers, and then they've spun out this business that is a financial services business. So these existing businesses are spinning out financial services, financial technology businesses, and I think that's allowed them to build massive businesses just off of what they were doing already. If you look at it, it's also happening to the telcos. So the telcos have a lot of what you need to become a lender, for example. So for a lender, there are 3 things that you really need. You need distribution, you need underwriting, and collections. Now, if you're a telco, you have massive distribution. People have you in their pocket, basically. And then you need underwriting. So what do these telcos do? They can underwrite based off of your existing payments, like have you paid your monthly payment on time? And then they can also do all sorts of things based on who you call, all sorts of creepy stuff that a lot of these companies actually do, is take the data from your mobile phone and use that to make an assessment of your credit score. So Orange has 270 million customers globally, and in Africa, they already had 34 million mobile money subscribers. Last year, they acquired a French banking license, and they're getting a Spanish banking license this year. So these guys are increasingly in the fintech world. And then we have the traditional financial institutions. So in the US, Goldman Sachs did not have a retail presence until a few years ago. And actually, after the financial crisis, they were regulatorily required to create a retail presence. So they launched in 2016 a new bank called Marcus. And they launched it with no-fee consumer lending. And within a couple of years, they had over $2 billion in loans outstanding. And they just launched home improvement loans. And these guys are actually a force to be reckoned with. And when we talk about fintechs, actually, I think what Goldman Sachs has built is a fintech company. And it's really impressive. So these are all challenges that we see with fintechs. Like, they're under pressure from all these different spaces. Retailers, telcos, banks. And if you look at Goldman, look at their open jobs today. If you look at this right side, the dark blue, all of those are engineering job hires. So like, almost half of the people that Goldman Sachs is hiring today are engineers. And that speaks to what they're trying to build in financial technology. And the banks are worried. I think, Jamie Dimon said it, Silicon Valley is coming. There are a bunch of startups with brains working on alternatives that are trying to take over our business. Now, he said that in 2015. I think what we've learned over the past several years is the fintechs have to, many of them are trying to disrupt the traditional banks, but none of them have done it yet. It's all sort of verticals, going after verticals of the traditional banks. But if you look at how traditional banks make money, in the US, roughly speaking, it costs $500 to acquire a customer for a bank, and they make about $250 per sliver that you go into. So if you're a lender, they make $250 lifetime. If you're a saver, they make $250 lifetime. So really how they make money is if you do multiple tasks with the bank. So they need to cross-sell you into a mortgage, into a credit card, into your deposits, et cetera. Now, if these fintechs are going after small slices, they're actually going after the things that really matter to the banks, because the banks aren't profitable unless they sell you multiple things. So Silicon Valley is coming. But it turns out that it's actually, all of these fintech companies need to partner with the banks. So all the companies in my portfolio have some sort of partnership with a bank, and the banks are the underlying technology. Now, what that might mean is the banks are basically become the plumbing, and all this technology and consumer stuff is built on top of that. I think that's still a massive opportunity. So fintechs were the disruptors, now they're the partners to the banks. But what are trends that we see in the future? So one thing is, fintech has come a really long way over the past several years. A lot of these companies you probably know very well: N26, TransferWise, PayPal, Credit Karma, et cetera. They need to expand, sort of like what I said with the traditional banks. The fintechs also need to expand beyond their first business into another business. We can talk about Credit Karma because it's in our portfolio, one that we know well. So Credit Karma started out as a free credit scoring tool in the US. So all it means is in the US, it's very important to have a good credit score. It means it's how you get an apartment, it's how you get a credit card, et cetera. And before Credit Karma came along, you had to pay money to get access to your own data. Credit Karma said, we'll give it to you for free, and we'll make money because by knowing your credit score, we'll give you the perfectly targeted lending product, whether it's a credit card or insurance or lending. And so that was great. Credit Karma has had phenomenal success. 80 million people in the US are using Credit Karma to check their credit scores regularly. But at some point, we had to move out of being a one-trick pony of using a credit card to get just credit information and sell you credit cards. So what do? They've acquired a few companies. They acquired a company in the mortgage space. They acquired a company in the tax preparation space. So what we said was, we're going to do, and they expanded into Canada. So what we said was, we're not just going to be the one thing, free credit score. We're actually going to be free many things. So we added free tax preparation. And the free tax preparation actually gives us so much more data into you that we can serve you even more targeted financial services requests. And that has made our recommendations so much better that the conversions have gone up, and it actually makes the company a lot more money. And so you could do this via acquiring, or you can do this via partnerships. But it is important that you move from one product into multiple products. So we can talk about Revolut. They started out as a digital wallet. Basically, it's a prepaid card. And then they've moved into crypto. They've moved into bank accounts. They've moved into brokerage. So the one-trick pony was originally starting out as a credit account that you could use for cross-border payments. And now they've moved into all these other verticals. And the same is true in all of the major fintech companies. Now, many of these companies that started out to disrupt the banks are actually now becoming the banks. So a lot of companies are applying for their own bank charter. And that's an interesting place because banks have historically traded at similar multiples. But these guys will go for potentially a much higher multiple. It'll be interesting to see how it plays out. And some governments are very favorable to it, some are not. The US is actually not very favorable. So in the US, I think that there's an opportunity for a new type of bank. And I call it BWS. You guys are probably familiar with AWS, Amazon Web Services. So I made this term BWS, Banking Web Services. I think that there needs to exist a company behind all these other companies that basically all they do is have a bank charter and have an API that you can build on top of that bank charter. So if I think about the future, I think about 4 different types of banks. One is legacy banks. The banks that are big all over the world. Those, there's nothing you need to know about. BWS is Banking Web Services. These guys just are a bank charter and an API built on top of it that everyone else can build on top of. And so who uses that? They're non-bank players. We already talked about Uber. So Uber is probably not going to get a bank charter, but Uber has the need to bring all these people into the banking system. So right now, when you sign up to get an Uber, to be a driver for Uber, they send you offline to a third party to get a bank account. What if that could all happen within the app? If there was something like a BWS, they could all do that within the app. The same is true for Airbnb, et cetera. And then I think there should be niche banks. In the US, there are 6,000 banks, and about 4,500 of them are making a lot less money than they used to. Like the large banks make sense because they can do everything to everyone, but smaller banks actually make no sense because you're trying to build the same suite of products for everyone, but for a much smaller niche set. So what I think they should become is a niche bank. So there could be banks for agriculture, banks for landlords, banks for just gig economy workers. And I think that there's a big future there. The final trend I'll say is regulation is really coming fast. So regulators are upping oversight on bad actors and issuing massive fines. Just in the past year, we've seen many billions of dollars of fines against the large financial institutions in a way that was not the case before. And recently, we've seen that in the US. So how many of you guys are familiar with Robinhood? A few of you. Okay, so Robinhood is an app in the US that allows for free trading. And about 6 months ago, they launched something called Checking and Savings, which was a deposit app that allowed you to earn 3% interest. And that is way more than you can earn in any bank account in the US. And so in one day, they received 1 million signups for this. But what they didn't do was check with the regulator whether this product was allowed. And they were using this loophole to launch this product. And basically, within one day of launching this product and getting 1 million signups, the regulators said, hey, this product is actually not allowed to launch. You've done something wrong here. So this is sort of where the mantra of move fast, break things doesn't really work is in fintech, because move fast, break things against a taxi lobby or against a hotel lobby you can do. Against the banks and regulators, it's much harder. So that I'll leave you with, and I think we're right in time for questions.
Thank you. So let's see if we have time for some questions. There we go. You mentioned that the innovation in China is very different from Europe and the US. How?
Yeah, it's a great question. So I think in the US, we have been thinking about things very incrementally. Like, what is one thing that we can do better than what's already exists? In China, they think about things in a whole new way, and part of that is they don't have a lot of the underlying infrastructure that is, I would say, an albatross in the US and Europe. Like, if a lot of people don't have bank accounts, how do you think about getting them to pay electronically? It doesn't have to go through an existing bank. It can go through a chat app. And I think that sort of new thinking is really fresh and allows us to actually think through things in a new way. So I've been really impressed by China.
Thank you very much. I'm just seeing the sign that time's up already. However,
no.
We'll have you back in about 90 seconds, so we'll have some more time.
Thank you, guys.
Cheers, Sheel. Thank you very much. Thank you.